So I'm sure you're all pretty aware at this point that I'm pretty damn sure a recession is coming, not just to the US, but to the Western world and probably the entire world as well. I also don't think it's too cocky to say that most normal people would agree with me as well, with inflation sky high and with the energy price crisis coming from this Russian-Ukrainian war. Well, it just all seems a little bit obvious to most people. To some, though, it really isn't so obvious. And one of those people is, of course, Kevin O'Leary, who we're going to hear from in a moment. And then, of course, Joe Biden as well, who is adamant that actually the American economy is as strong as it's ever been. So today we're just going to listen to what they have to say, and then I'm going to briefly explain why I disagree with those people, and then we'll finish off by hearing from Mohammed El-Arian, who is one of the most accomplished investors around and who has an incredibly accurate track record, especially over the last couple of years when it comes to issues like the economy and inflation.
I'm in the camp where the economy is much stronger than people think. And so I've been putting money to work over the last couple of weeks. You can't catch the bottom. It's impossible. But I don't see any indication in my private investments, which are across a wide range of sectors, everything from commercial kitchens to insecticide, wireless charging, gym equipment, greeting cards, all these private companies I have a stake in. I see their tear sheets each week. We don't see slowdown yet. And so I think I'll be one of the first to see it. I'm sort of a canary in the coal mine in that respect. And so a lot of this concern is anticipating a recession, figuring we are due one at some point. But what everybody's forgetting about, there's two factors which make this more challenging to really call. Number one is we poured $4.5 trillion in 36 months into this economy from a helicopter, into the hands of consumers and businesses all over the land. That's a lot of cash, and it's still there. Number two, and this is far harder to measure, but there's a tremendous amount of productivity inherent in this economy now through technology. In the last 2.5 years, we've started to develop a direct-to-consumer model in every sector of the economy, with much higher gross margins, much more data, far more efficient in deploying capital. If you're Nike and selling sneakers all around the world, direct-to-consumer, which is 55% of their business, up from 38 before the pandemic hit, that's a much higher margin business, much more productive in terms of returns for investors, and you get all that data from customers direct, size, preference, color, purchase date, all of that from around the world, which you didn't have 2 years ago. So I suggest that the economy that's emerging now, the new digital direct-to-consumer economy, far more efficient, far more productive, and that's not baked into the numbers yet. And so those that are really saying we're going to get a massive recession could be wrong and be missing returns as this market slowly claws its way back.
So Kevin's basic ideas there are that from his point of view, he has loads of access to a bunch of different private companies because he's an investor in them and he's quite a major one too. And his private companies are doing absolutely fine and he sees no sign of their businesses waning and therefore of a recession coming. He also makes a point that actually the world and its economy today is far more efficient than it was even just a couple of years ago, with one of his examples being direct-to-consumer selling. It's allowed certain companies like Nike in his example to massively increase their margins and their revenues and their profits, and that's good for business in his opinion. Finally, he also made a little bit of a rally against talking heads, and as a talking head, I do understand that, but he also said that actually he cares about numbers and not opinions. He doesn't want anecdotal evidence, he wants real statistical evidence. Now, there are, of course, a few problems with what he's talking about there. Now, he appreciates numbers when it comes to his private companies, but apparently he doesn't appreciate the bond market and the numbers coming out of there. He doesn't appreciate the skyrocketing mortgage rates across the entirety of the United States. He doesn't care about the consumer confidence figures that we've been getting that are the lowest in American history. He doesn't care about collapsing disposable income figures. Basically, he only cares about the positive numbers that come out of his private companies, and he's conveniently ignoring all of the negative numbers which are coming out and actually suggesting a recession. Now, regards to his efficiency claim, in particular about direct-to-consumer selling, he is missing out on one major aspect, and that is the idea of crowding out. Now, yes, it is true that if Nike sells their products directly to their consumer, they get a greater slice of the pie, they make more profit, and they're a healthier company for it. But as Nike grows, the old companies that used to service customers start to die. Nike goes up, but Foot Locker goes down, and that's something that Kevin O'Leary seems a little bit too eager to just outright ignore. We don't know for a fact that direct to consumer is actually a net gain for the economy. Cutting out middlemen can sound like a brilliant idea, especially when it comes to that company which is able to increase its margins, but it doesn't necessarily mean that it's going to contribute to higher growth for an economy. Now, one thing that I actually do fundamentally agree with him there at 100% is that we don't know exactly what's going to happen. I don't know for a fact that a recession is coming. I'm just pretty damn sure it's here. He's on the opposite side of the fence. He doesn't know for a fact that it isn't coming, but he's pretty damn sure it isn't. Thankfully, though, it isn't just up to him to decide this, and it isn't up to me either. And so we're going to hear a little bit from Mohamed El-Erian, who is one of the most accomplished bond investors in the world right now. He's worked at Allianz and has made them billions of dollars in the past and has amassed a personal fortune to go along with it. And in particular, the reason I pay so much credence to what he has to say these days is because he's been spot on regarding inflation over the last couple of years, when every other investor, Kevin O'Leary included, has been wildly wrong.
Has the Fed just committed to driving us into a recession?
That is an unfair question because the Fed has no choice but to confront inflation. So in doing so, and because it's late, yes, it has increased the probability of a recession. But the original sin, John, was committed last year. And once you start from such a suboptimal position, you end up in this dilemma, which the Fed has right now, which is going to end up making one of two policy mistakes. Either push the economy into recession with a high likelihood, or alternatively persist with high inflation for too long.
You believe they would take the latter option. Is that still your stance?
I believe they're going to flip-flop. And that's the worst of all three possibilities. That right now they're focused on inflation. As the growth consequences become clear, that they're going to ease their foot off the brakes and then have to slam on the brakes again. And that is my fear, that they will end up flip-flopping, something that we used to witness in the old days with central banks. And I worry that we may see it again. I hope we don't, but I do worry that we may see it again.
Is that weakness clear now? And do you think their dual mandate is in conflict right now already?
So it depends how you define the mandate. If the mandate is strictly defined as employment, no, the labor market is still doing well. If you take it broader and look at growth, indicators are that growth is slowing down. The Atlanta Fed is at 0 for the second quarter. An average of projections see it coming down below 1%. So growth is slowing down, but the good news is that the labor market is still strong.
So, Mohamed, when Chairman Powell says this line from this morning, the Fed is acutely focused on returning inflation to 2%, how much damage do you think he will have to inflict on the economy to achieve that?
Unfortunately, he's going to have to inflict some damage, John. He's late. He's very late. He should have started last year easing his foot off the stimulus accelerator. He didn't. I always go back to the very simple factoid. The week in March that the US printed a 7 handle on CPI, the Fed was still injecting liquidity into this economy. Just think about that, John. So he's very late, and therefore the collateral damage is going to be significant.
So El-Erian seems pretty steadfast in his view as well, that actually the Fed doesn't really have a choice, that it is causing a recession and it has to, but this isn't the sin of the Fed. The sin was ignoring this action and pushing it until this point in the first place. He also notes that his real worry isn't that the economy is going to crash because of the Fed's tightening, it's that the Fed is going to lose their resolve and halt their interest rate hikes and halt quantitative easing, only to be forced to start all over again when they turn the money printer back on and inflation begins to soar again. Now, what about Joe Biden then? What's his position on this entire recession thing? No, he's not an economist, but he is the president, so it might be worthwhile listening to what he has to say. And in short, he doesn't think that there's actually a recession coming. He thinks that his administration and the Federal Reserve can adequately maneuver the economy to avoid one. And frankly, I wouldn't expect him to say anything else, but that doesn't mean I think he's right. And honestly, I don't even think he's being truthful here. Now, what exactly did he say? Well, he said that the US is in a stronger position than any other country in the world to overcome this inflation. And he's also said that the recession is not inevitable at all. But he is acknowledging that actually consumer sentiment is really poor. In his way of saying it, that was saying that Americans are really, really down about the state of the country. At another point, he said that he's never been more optimistic for the US economy than now. And in short, of course, that's utter nonsense. That's an actual lie. The problem is, though, Biden has to say this. He doesn't really have a choice here, because if he comes out bearish for the economy, if he comes out with negative statements, it would become a self-fulfilling prophecy and it would just start a recession even quicker. The simple truth is that most recessions start simply because people feel a little bit off about the economy. They start to worry about their job security and the security of their family, so they make cuts on their spending. Maybe they don't go out for their usual Saturday night dinner, and maybe everyone else in town does the same thing and makes those cutbacks. And so businesses start to struggle, they start to lay off staff, and now even more people fear about the economy because they're seeing people lose their jobs. And so it becomes this positive feedback loop where negative news feeds into negative reality, and then that creates more negative news. Unfortunately, though, Biden being positive and being really upbeat about the economy in the US isn't really enough to stop this from happening. Consumer sentiment reports have never been lower in American history. People are running out of money, and inflation is the underlying reason why. At the end of the day, this will cause a recession because of mass human psychology, not because of economics. If you enjoyed this video, then make sure to like, comment, and subscribe to bless the YouTube algorithm. It really does help. If you want to join our exclusive community, then check out our Patreon. You get access to our Discord server and extra content like access to my portfolio and buy and sell alerts for all my own investments. Also, make sure to check out the link in the description to Masterworks. It can help you protect your portfolio against market turmoil through fractional shares of art from world famous artists. Art has historically proven to be uncorrelated to the markets, so it's a really valuable resource with the markets falling every week. There's also a link in the description to I Trust Capital, which helps you to invest in crypto through your tax-advantaged IRA, which could literally save you thousands. If you, like me, think crypto going down is a buy-in opportunity, then now is the perfect time to join I Trust Capital. Thank you all for watching. Stay stoic. Until next time.